Monday morning, Market Chameleons. Everyone, thanks for joining the
Hey,
Market
Will, I
Chameleon
think you're on
pre-market
mute.
show. Can you hear me?
Yep.
Can you hear me?
Yep.
All right. You want to start with the disclaimer, D? Let me put it up
Yeah.
there.
Yeah. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Perfect.
I'm going to share my screen. While I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it. He'll read them back to me. And to give you guys a couple minutes to put those questions in, what we'll do is start out taking a look at the pre-market report to see if we could get insights, what's trading or what's going on in the pre-market hours, and then we're going to move on to the questions. Okay. So
Sounds good.
pre-market report, these are stocks that are trading in pre-market hours. We first have this calendar view, which allows you to go back in time if you select date to see what happened in the pre-market hours on that date. It also kind of just gives us a view from a high level what's been going on, so we could see, in the most recent history, how many stocks were up and down prior to the open, how much dollar value stocks traded. So today we're on December 14th, so could kind of compare these stats to the most recent 4 days. But so far today, we got 915 stocks trading higher in the pre-market hours, 208 stocks trading lower. We got, as far as volume goes, 375 million shares trading on up volume versus 46 million on down volume. And if we convert those shares to dollar value, we have $4.5 billion worth of stock trading higher, $583 million worth of stock trading lower. So from that perspective, looks like a pretty strong bullish sentiment in the pre-market hours. And as you could see here, we could eyeball the most recent days and keep in mind that we're still around 9 o'clock. We have a half hour to go, but you could see that very skewed, tilted towards that the buy side in a pre-market. Let's take a look at it from a couple more perspectives, and then we're going to move on to the questions. I'm going to scroll down here, and now we have a list of securities that are trading at pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. This list consists of stocks that do have to meet certain thresholds to get on this list. So we have liquidity thresholds, volume, price changes, because things in a pre-market can be very illiquid. And looking at the percentage gainers here, I see that 262 stocks made our percentage gainers list, 37 on our decliners. So this also supports a very bullish bias into pre-market hours. However, when we look at this list, we do see that there are securities in there that are low cap stocks. There are securities in there that are ETFs. It could be a closed-end fund. It could be a leverage product. So to make this initial list, as long as it's trading pre-market hours and is listed on a major U.S. exchange and meets those thresholds that we set for price, volume, liquidity, it could make it on this list. So to narrow it down to a small group of stocks, we could use the filters above. If you have a watch list, you can filter by your watch list. I'm going to use this filter in ETF. We'll click on it. We get a drop down with menu with different ETFs to select from. The top one, SPY, that's the S&P 500 ETF. You're going to click on that. And when you do that, the list below will get filtered by stocks that are holdings in the SPY ETF. All right, so these are the S&P 500 constituents. And we see here 50 stocks made our percentage gainers list, 1 on the decliners list. So almost from every angle that we looked at so far points that trading in the pre-market hours is very bullish, basically all on, mostly for the majority from on the buy side. And of course that is coming after yesterday's Fed decision that looks like, besides leaving rates unchanged, now the feeling is that the next actions will be to cut. Right. I think at this point, people are now preparing for the Fed to cut. We don't know for sure. The market has
it is really
the market has been cut.
It is amazing. And you said we're not sure, but it seems like it's already built. It was already built in prior to the announcement yesterday. Market was already significantly valued, right? And now it's like, I mean, it just be aware that there is some downside, right? Some of these numbers come in worse, inflation, anything. It could be a real problem.
Yeah, because these things, they've been wrong. So the market consensus has been wrong. Look, the treasuries at one point, were priced. The 10-year, I think, was priced below 1%. With that indicating we're not going to have any inflation for a long period now. And I think part of the way the bets are lining up is because of the way the Fed has acted historically, which was that they are much more inclined to print and inflate and create paper wealth. They like to do that. They like to create paper and they like to funnel it through the banking and financial system. And people have gotten burned a lot of times because of the Fed, because they're very quick to inflate, right? So it's almost like that they're sitting there wanting to do that, right? They want to lower interest rates and start inflating assets and pushing money through the banking system. So I think that part of it is that already the history of the prior actions have been, now it's in the back of everybody's mind. Everybody knows it, and they think that this is the way they're going to go. So I think that's what's part of it. And that, I've read a lot of articles by people who said that they've got burnt too much by the Fed, in the sense that they're going to go in there and just rescue and inflate and throw money at it, that they don't want to bet the other way anymore.
Yeah, well, I mean, it's a whole verb. Don't fight the Fed came out of that, right?
Don't fight the Fed. Yeah. Well, the Fed. Well, at this point, they were trying to stop inflation. I guess that they feel like that they've done that, to the point where they were going to lower rates. But the Fed, I don't think that they said they're going to be lowering rates either.
No. They're going to be watching the data. Everyone should be aware of the data, right?
Yeah.
Again, those data, those reports on inflation are going to continue to be significant. Listen, just the other day, the White House said that companies have to start lowering prices, right? Inflation's over, you have to bring your prices back down. So it's still it's a problem for consumers. I'll tell you that.
Right.
You go into the supermarket and it doesn't certainly doesn't feel like inflation has slowed down.
No, and even if their their target 2%, even if you get some readings below 2%, doesn't mean that right away you have to cut. The 2% is kind of like this baseline. It's going to fluctuate around it. So you want to be, sometimes you're going to be below it, sometimes you're going to be above it, but you want to be close to. You want to be. They're not going to get an exact number. So even if we go below it temporarily, those numbers are bouncing around. You're not going to get like an exact 2% across the, on each reading. So yeah, so we'll see. But so far it seems like it's recently been going more their way.
I would agree.
Yeah. But yeah, well, we gave it a couple minutes. I mean, if you have questions, I'll take questions.
No questions. Rob was commenting like we were on different things relative to inflation.
Okay.
He said the ECB stated this morning that they expected inflation at 1.9% by 2026. So they also see it coming in, I guess. Hyper
Yeah.
prices remain for a long time. Remember when gasoline was 20 cents per gallon in Western Homeland, where I mean it's prices, it's hard for them to go back, right? Prices once
they're high, yeah.
Trading at a certain level, a business, it's not necessarily going to lower the prices just because it may be a little less.
Well, you risk creating an asset price bubble if people start speculating that we're going to go, because right now it's up in a way. But again, that could create an asset bubble where then the Fed is forced to address that, right? Like they did in the internet bubble, or in a housing bubble in 2008. Let's go. If we don't have questions, then I'll briefly then maybe just show a feature, a tool that that I get questions on, or over the emails, and then I'll just bring it up here, because if we get questions on it, either the person is watching or other people have questions on it. So we have, from the options chain, there are a lot of functions and features within this options chain themselves. And one of them was this call backtest, put backtest. So when you click on it, it actually opens up the page, and it gives you a stat, okay, a couple stats here on the long call that's associated with this particular strike. So what initially it's doing is saying, okay, if we just went back in history, right? If we went back in history and found a similar call, right? So this option right now has one trading day to go, right? And here are the strikes. So each strike is a certain percentage distance away from the spot price. And if we just went back in history, we'd say, okay, well, first of all, how frequently did an option, that was this distance away, this many days to go, by expiration, was it profitable, right? So no matter where because the option could have been, different prices at each point too. So keep in mind that the option prices are changing, and they're not always the same price. So like, for example, this one, 15 cents, whatever premium that is, or parity, it's not always the same in history. But what we're doing is saying, okay, irrelevant of the premium, right? Whether it was 10 cents, 5 cents, 20 cents, what by expiration, right? How often was it profitable from that point. So if you bought it at 15 cents, waited till expiration, how often was it above 15 cents? Okay. So that's what this is showing you, the percentage of the times that happened in history. All right. So, and even in the money, even though if it's in the money, if you bought it on the offer, how often was it? It could still be in the money, but how often did it go above what you would pay for it, right? So then here it also lists the average returns because sometimes out of this 4%, let's say, or where was that 8%? Well, 8% of the time it was profitable, but what was the average return? Because if that 8% of the time was so profitable, like such explosive, if it goes from 15 cents to $10, well, the average return could be positive too, right? Because there's no cap on how much an option could go up, right? It could go down 100%, but it could return 10,000%. So the next thing it does is it shows you from our history, if we averaged out all the losses, all the wins, so here you could see, on average, it was down 46%. So if we wanted to see that, if we click on that, then it brings us up and loads all the data that went into this. So here you could see here, it looked because now we could analyze it further. And if we look at it, we could see, okay, this is the summary stats. This graphically, this shows, the amount of times, it was profitable in the green. So in the green, you could see here in 2018, that option returned 5,000%. Couple of them here, 2,700%. So you could see that these are low price options, but they can potentially have very big returns, right? And the reds, are all losses when you hover over. So I think the question was, well, can I see what happened here? So if you click on these show details, they'll go back and retrieve the data. Okay, retrieve the data that was in this analysis. So here, the most recent one we see, or wait, this is sorted by, okay. So over here, we could see on December 12th, right? So one day to go, December 12th, at the end of the day. We're looking, this was where the stock price was, let's say 464 around. And we would be looking at the 470 option at that time, right? It had a 5 delta. This was the market in it, 7 cents, 8 cents. This is the implied vol in it. The stock at expiration ended up being 470.5. Okay, so actually this was yesterday, right? This was yesterday, actually. So you could see here that option from the day before went from 8 cents to 50 cents, right? Because the 470 strike was a $0.50 in the money. So that one actually returned. So what's the return on it? 500%, right? Because if you're buying it at 8 cents, selling it at 50 cents, you got in percentage terms, that's a really big return. But lots of times it ended up being zero, because you go from 4 cents to zero because either stock didn't cover by expiration, didn't go up enough, went down, stayed the same. So that thing would have just ended up being worthless. So that's where you could come in, start kind of seeing the. I think we even have a download button here. And that's just a way to kind of look back in history, just to get a sense of, okay, you got this, whatever option, right? And you just curious to know, no matter where the premium, if you just used basically days left of trading to expiration and the distance from the spot price, how often, was that option profitable? So that's what this particular report is doing. But then when we trade, and if you wanted to change that to just the delta, let's just say you wanted to run it by delta, so that would be adjusting it, okay, by the most recent delta. So when you adjust it by delta, that takes into consideration where the implied volatility is. So if the implied volatility is higher, right, a 5 delta will go high to a higher strike, right? Because the more implied volatility you give it, the higher the probability is of it going into money. So the distance of the spot price will be higher. If the implied volatility is lower, then the distance of that delta will be closer to spot price. So if we just change it by the delta, and I'll run that. So you could see that this delta right now is like 7, I think. So it's going to try to find deltas that are close to 7. The strikes with the closest deltas to 7, and then it'll run the same stats for you. So you could see here that now it's a 5.7% win rate, meaning at all our history going back to 2017, over time, only 5.7% of those observations ended up being profitable at expiration. That option would have been valued more at expiration than from the starting point. Okay. Now, when people trade options, they don't always just trade that option based on direction, right? Sometimes they do it for volatility purposes, or just like a delta neutral in the way. So here we have 2 more views. One is a delta neutral view. So this one would say the following, that if you traded the initial option, it has a delta. So what if you just hedged that initial delta and waited to expiration? So, if it has let's say 20 options, you bought 20 options with a 5 delta, well, that would give you an overall delta of 100. So you would have to short 100 shares of stock. So you have 20 calls, short 100 shares of stock, and then you wait till expiration. How did that do? So you could see here that the win rate went up a little bit, and the average return, even though negative, is better. In other words, you could have, because those times that the stock went lower, right, you would have made some of it back on the stock, right? Because you're short 100 shares of stock. So, and sometimes it would have been completely profitable, because if you're short 100 shares of stock and the stock falls by enough to cover the cost of those calls and more, that could have been profitable. So that's how that looks. So that improved on the win rate and the average return. And if you traded delta neutral, complete, just re-hedged every day the new delta, it looks like your win rate slightly improved from 29.9 to 29.2, but still the average returns the same. So this delta rehedging would have been equivalent to saying that no matter where the implied volatility was, if I just traded delta neutral, every time it would still have been a loser, meaning the realized volatility that you could trade didn't cover the implied volatility that you're paying. All right. So, and you could move those implied. Let's say you moved in and said, well, what if the implied volatility was very low? Let's go to here. Everything below 6, right? Rerun it. And then, so I think we have to. So if we ran it and we applied the same thing at a very low implied volatility, right? So now, you don't have much time left, but now you see that this IV range, the implied volatility of the option, I narrowed it down. Now I want to just see that part where the IV, right, where the IV of the option was below 6.6. Okay, so now all of them are below 6.6. That's all the instances, right? So I narrowed it down to the 39 observations that we could find here. We could see in the most recent one there were, but so what happened? Well, the win rate went up a little bit, right? 12.8. So in other words, it's still not, massive. So 12.8% of those observations in history saw a positive return, but the average return at this point was positive 10.6. In other words, yeah, you most oftentimes it was a loser, and most oftentimes it was still a loser. But out of all the observations, those big ones, there were still a couple big ones that, on average, if you held on to the expiration, though, in those instances, you could see that the average return was better, right? That's what it was showing. So, and then we're right up at 9:30, but this allows you to start changing the parameters and looking at the data from different ways. Okay.
That was great,
right.
D. We did have a question from Rob. We can hit it tomorrow. I'll send it over. He was asking about the option idea dashboard on the new Delta volume trade tab. So maybe we can take a look at that tomorrow.
Okay. All right, guys.
All right, perfect.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope